Welcome to item 101 of Crypto News Weekly. We are celebrating that we have uploaded 101 items of our podcast. And how are we celebrating? With a crossover episode. Welcome, Nicholas.
Hey, Walter. It's great to be here, man. Thank you for having me.
Fantastic that you can join us. We couldn't imagine a better 101st item to upload for Crypto News Weekly.
Thank you, man. It's great to be here, and Christo, it's nice to catch up with you, man. It's just been great. I think ever since everything's been going down on the world stage over the last few months, making 2020 a pretty bleak year. I'm happy to get to catch up with two good friends of mine from across the world.
It's good to have you on, man.
How are you doing?
I'm doing very well, thanks. Yeah, it's actually my first video episode or video podcast that we've done. It's funny. We were just talking before this episode. We've been doing this podcast for a year and a half, and you had no idea what I looked like, and
I had no idea what you looked like.
So, hopefully I'm what you expect, and nothing too crazy. But yeah, man, it's been awesome. It's really great to have Nick here. He's a wonderful friend, and he's doing some really cool stuff. So thanks for taking the time, man. Really appreciate it, and looking forward to the episode.
Oh, absolutely, Christo. I mean, it's a pleasure to be with you guys. And to your concerns, if you have any, Christo, two dapper gentlemen, I can say. If anyone attests to that, leave a comment down below. But yeah, no, I think it's going to be an awesome conversation, guys. I think we've got some exciting times ahead of us here in the next few months going into 2021, and I'm just excited to dive into the conversation with y'all.
So if listeners or viewers are a little bit confused because we are uploading this on both platforms, you can go from Crypto News Weekly, our podcast, hop over to YouTube and go to DataDash and see our faces. Or if you're on YouTube already and you gotta go to the bus and you can keep on listening, go to Crypto News Weekly and you can listen to this in a podcast form. So a real crossover episode. Best of both worlds, right?
Truly, yeah. It's there's a bread here in the UK. It's called Hovis Best of Both, where it's white but it's brown on the inside. So this podcast is much like that, I think.
Great. So shall we just dive into the news?
Absolutely, man. Yes. What have we got to talk about? I'm excited.
So the first item I've picked is about Square investing 50 million into Bitcoin. Of course, last episode we talked about the big investment of MicroStrategy, and now other companies are following. What do you think about this, Nicholas?
Yeah, man, I think there's a lot to kind of unpack with this. So I think, at the start when I started to see companies like MicroStrategy and Square starting to buy large sums of Bitcoin, I was thinking this was the typical kind of like, we're going to do something to kind of please our shareholders or get shareholders interested in buying our stock. There's a lot of companies that will do these kind of small one-off events that kind of, boost the share price 2 or 3% for the day, or kind of serve as a bumper, a bit of excitement for these companies. But as we started to see Square, follow MicroStrategy, and we're starting to see a lot of other major companies consider doing the same, what I've started to realize is this is a direct response to what's going on in regards to monetary policy. One problem, though, that I see with most people's analysis is that they're usually focused on the element of money printing from central banks being the key driver of this. And though I do agree, this year, for example, we had over 20% of the entire cash supply that exists in the economy created this year alone in 2020. So there is mass amounts of inflation that is calling for people to have to basically manage their treasury, manage the reserves that they have in their company, and they can't keep it in dollars anymore. But the bigger thing that I think is going to start hitting people more is the depreciation of currencies through negative interest rates. I think this is going to be kind of the catalyst on top of high rates of inflation that's actually getting people to consider, maybe we need to start allocating some of our dollars into other different types of assets. And this was a problem back in the 70s. Melton DeMorse put a really good tweet storm out about this, about treasury managers, and how in the 70s, when the CPI, or the consumer price index, which basically measures inflation, had shot up, you had this period of time where monetary policy was rapidly changing. You have a lot of people who are starting to manage these funds and reserves into different types of assets, such as gold or assets and properties, things like that can at least give you some kind of hedge against that inflation, or in this case, something that we haven't seen in the United States, but we have seen throughout parts in Europe and in Japan, which is negative interest rates, which is a whole nother type of category of speculation. And I think, again, that the reason I want to drill this point, my kind of last point on it here, why I think the negative interest rates are the real kicker is because what negative interest rates do is they not only penalize people who are putting money in savings, they penalize people who are holding bonds. And the bond market is a massive investment class that a lot of companies or corporate treasurers in this case would usually use to hedge. So they'd usually buy U.S. treasuries, they'd buy German bonds, they'd buy all types of different types of government bonds, but now they can't do that, or at least they're going to be penalized by negative interest rates. So it's a game of, will the bond price go up enough to compensate for the money that I'm losing from the negative yield? And that's a speculator's gambit in that case, not something that a corporate treasurer is looking to do. So.
Christo, do you see this as good news?
Well, we've touched on this before, and to sort of echo Nick's sentiments, I think it's very difficult to actually put your money somewhere where it's not going to lose money, or lose value, I should say. Just by physically holding dollars, you're losing money because, as Nick correctly said, 20% of all currency in circulation, US dollar specifically, has been printed in the last 5 years, and it's a pretty scary statistic if you think about it. And then if you're not going to be able to get the hedge that you need with bonds, what do you put your money into? And that's a debate that's currently ongoing. But I certainly think if something is anti-inflationary by logic of having a restricted supply, then at the very least it's an honest way of trying to counteract what the Fed is currently doing in terms of devaluing the US dollar and devaluing currencies. And it's not just the Fed, it's also the EU banks, and they're doing it here in the UK as well. And investors are constantly trying to find something that is not going to take away their value, whilst at the same time having an appreciable amount of risk. We're sort of in the markets a lot more than long-term investors who might only dip in once every 6 months, once a year, once every 2 years. And for them, Bitcoin still, in my opinion, provides a long-term strategy, a long-term hedge against the devaluing of currencies. And you could argue, well, it swings 30% up, 40% down, but ultimately over a long enough period, I do believe that Bitcoin is starting to become an active hedge against that. Now, we are still in the early days, certainly just over 10 years old. But let me ask you this, what else can you put your money into? If you say, oh, well, you could put it into, stocks, well, they're being pummeled up by, mass printing by the Fed anyway. Okay, if it's not going to be stocks and equities, what's it going to be? Bonds? Well, say what we just discussed with Nick there. If it's not going to be that, then maybe property. Well, we had a recession in 2008. Property was, severely affected by it. There's no guarantee that it won't be this time, especially because who's going to be able to actually afford houses when jobs are being lost? There's this virus going on. The economy is built on, fake money, effectively. So actual cash has to come from somewhere. People have to have a desire to purchase a £1 million flat, in San Francisco, or $1 million flat, wherever for that matter. So, there's not that many options at the moment. If you have money, it is a problem. You've got to find out how to keep it, and how not to lose it. So I think it's not a good or a bad thing, to answer your question. I think it's a natural thing. I think investors are going to start to look for off-risk and alternative investments in order to try and protect their capital at all costs. Bitcoin is just one of those options. So it's, for me, natural that large companies like this would start looking into the space.
Well, personally, I'm still very happy with the news, just as with MicroStrategy. I think this once again proves that a big serious company, because of course Square is on the New York Stock Exchange, so it's not a small player, that big companies like this are starting to see Bitcoin as a serious option to invest sums of their money in. And in this case, I believe it's around 5%. I'd say good stuff, and I hope a lot of companies will follow. 5 years ago, we couldn't imagine talking about news that such big companies were pouring money into Bitcoin. And even maybe it's a very small step in the far future for countries to start owning Bitcoin.
Yeah. They may already do. We'll never know.
Or is that a little bit far-fetched?
It's hard to tell. That's the unique thing about Bitcoin. They may already own Bitcoin, but if they do, they probably aren't going to be telling everyone about it. So, it's not in their interest to do so, I don't think.
Yeah, I think to that question, guys, I think, I'll be honest, I'm usually, I think some people see me as an overt optimist in the space. I'm pretty rational about like expectations where I could see Bitcoin going as an asset. I don't know if in this cycle we're going to see any major governments of the world, like from, the US or anywhere in Europe, per se buying Bitcoin openly. In that case, there are some governments or central banks who are rumored to have it, or there have been claims that they've maybe seized it from certain types of previous kind of like days in Bitcoin where there were like operations on the Silk Road in certain countries or criminal hackers, and they basically seized the Bitcoins from those criminals, and they themselves became the new owner of the keys. So. Outside of that, though, I think this wave of what we're seeing with Square and MicroStrategies it's a secondary wave of the corporate treasure where, it's going to get to this point where, like you mentioned, Christo, it's like, man, you've got to get it into something. Like, you've got to get this capital somewhere. Warren Buffett, as someone who's been so critical about Bitcoin as an asset, because he's caught in this mindset where he needs something that generates a yield. He's also complaining about negative interest rates as far back as there was a video when he was getting interviewed in NBC back in 2015 where in Europe, negative interest rates have been the standard, and he has a company in Europe that has about, I think it was like 100 million plus euros in this case, that's just sitting in a bank. And every year, he's losing about 1.3 million euros. He's getting penalized for just sitting it, like having it sit there. And he said it'd be better just stuffing it under a mattress. So, I mean, this basically proves a problem where this is just going to get systemically worse over time. And what we have to think about is, it's like, okay, maybe it is decent if I put 1 to 5% of my portfolio in assets like gold, silver, Bitcoin, Ethereum, different types of things that can give you that kind of exposure to an asset that can perform so well, that is autonomous, it's limited in supply, that you can hedge against the depreciation of all your currency in your portfolio. And the way I see it is, as you mentioned, Krista, the properties of Bitcoin are really what make this narrative so clear. Bitcoin doesn't pay you a yield, but it also doesn't penalize you. So there's a check mark right there. We just want something that's just going to not penalize us for holding it like negative interest rates would on bonds or on currency in a bank. And the second one is, can it be printed into oblivion? And it can't. That's the great thing about Bitcoin in the sense of its limited supply. So if you really maintain those two properties, there's really only a few other assets in the world. Gold and silver sort of meet this. You can't just print them into oblivion. There is no negative yield on owning gold or silver. But gold and silver don't have a predictable finite supply like Bitcoin. And that's where, again, when people make the argument on one side or the other, I would say that's the best trait about Bitcoin is a fixed programmable monetary policy. And what that offers to the world, especially those in emerging markets, those who are looking to do currency hedging, that's basically the opportunity that I see at hand.
Yeah, and also not to blow this news up to too big proportions, Square, of course, is a company that has the Cash app that enables buying and selling of Bitcoin. So they were already sort of with 1 foot in the water. So it's not yet the news that something like Amazon is buying a large proportion of Bitcoin. But I think positive news nonetheless.
Absolutely, man. Yeah, I'm interested to see more companies come in because I think, again, to your point there, Walter, like there's a lot of people who get overly optimistic about the news. There were some headlines I saw where it's like publicly traded companies own it was like $7 or $8 billion worth of Bitcoin. But the problem with that is a lot of those are trust funds or basically ETNs or exchange traded notes, basically companies that are building financial products that buy Bitcoin on the market, back it behind their exchange traded notes or paper products, where people are investing in it through their brokerage accounts, like E-Trade or Robinhood. So I think to say that that's companies owning Bitcoin is a bit misleading. To your point, though, on the other hand, it's like, we do have companies like Square making substantial purchases of $50 million of Bitcoin. That's no funny number. That's a very substantial amount. And then also MicroStrategy coming out and pretty much converting their entire balance sheet to it. I think that that's a very, very an interesting and telling sign that things are going to change. And I have no doubt once we see one or two more companies get into it, the rest are going to pile in, or at least there's going to be a pickup in momentum where this won't stop. But we'll have to see. I want to give it another few weeks, and we'll see if there's some other companies who take the white paper that Square wrote up about how to actually go through this process, and see if they run with it.
I think it's notable as well to consider where we are in the sort of history of Bitcoin at the moment. We're talking about people buying Bitcoin, or companies buying Bitcoin versus companies adopting Bitcoin. And there's certainly an interesting dimension to the whole news here, where Microsoft used to accept Bitcoin previously online. And the narrative used to be accept Bitcoin because it's a better version of cash. What they're talking about now is actually buying and holding Bitcoin, which is more of the sort of the digital gold, a hedge against inflation, the sound properties of Bitcoin, and things like that, versus the actual usage of Bitcoin as a currency. And I think that's probably it's a long-standing debate: is Bitcoin cash or is it digital gold? I'll leave that up to our listeners, but I certainly think the fact that large companies are making big bets and are willing to hold, and certainly have made no indication that they're suddenly going to start accepting Bitcoin and using Bitcoin, versus them actually purchasing it to convert their balance sheet or to have exposure to it, is a really telling sign that we're shifting more to the digital gold narrative. And certainly I think the contextual factors that are ongoing in the world at the moment, with what the Fed is doing, with how the markets are, it certainly points more to that direction. But I'm interested to know your thoughts, whether or not this is a step towards the digital gold versus Bitcoin as a cash narrative.
Yeah, I'm curious, Walter, maybe you have something to say. And I definitely agree with Christo on that. Like, I think above all, this narrative's been building up for a while, and now it's finally like it's being realized in a sense. We're seeing the kind of visual reminders that, all these years we've been shouting through the roof that this is going to happen as a community, and it's finally getting there. I think, the moment that I would tell you guys, if I could share anything that I would say to look out for, is whenever we do, and I'm expecting it's going to happen sometime in Q1 of 2021, so a couple months away, but I think that we're eventually going to break above those $20,000 all-time highs on Bitcoin, and we're going to kick off the next cycle. And when that happens, when we really get above 20K and we start moving beyond it, that's going to be the aha moment for institutions. It was the same exact thing that happened when Bitcoin broke above 1,100 for myself. I, for years, brushed off Bitcoin. I had first heard about it in 2011, and I thought, I watched the Silk Road happen. I watched the speculation going on, that it was dark money. And then once it bottomed at 200, I kind of watched it for a while, and I was like, I don't know if this thing's going to come back. And once it got above 1,100, I was like, wait a minute, okay, I gotta look into this. Like, if it's back at the all-time highs and it had a substantial rally back up, I have to read it. And that's when I understood what Bitcoin was. I took the time to read it, and I saw that it had the market dynamics, the momentum to really become a new asset class. And that's when I bought my first position, like late 2016, early 2017, and got really interested in the space. So I think that we're gonna have the exact same thing in 2021. And I don't think that we're going to peak out that year. I don't think we're going to set our all-time highs in 2021. I think it's going to be until late 2022, in my opinion, before we really peak out in the market. But you got to have that first step of getting above the previous all-time highs. And that's going to be a really exciting moment where I think you'll see a lot of those corporate treasurers really start to follow in Square's footsteps in that case.
Yeah, with Corona, I'm also a little bit less optimistic where the Bitcoin and cryptocurrency market is going. But let's talk about the Bitcoin prices specifically in our technical analysis in the end. Shall we move on to OKEx?
Okay. Man, yeah. Okay.
Okay. So, of course, the hottest story of this week, the withdrawals are suspended right now. Is this something to be worried about, Christo?
Well, I mean, what a year it's been for exchanges and the
We just
space in
talked about a
general.
hacked exchange last episode. They keep coming.
Yeah. I mean that was KuCoin, and prior to that we've had several other exchanges, and of course we've had the Bitmex news as well about the Bitmex founders being arrested. It's really been a tumultuous year, and there's a couple of things to note from this. A, the fact that hacks are going ahead, but the Bitcoin price is not moving. It does not react anymore, and that, in my opinion, is a really positive sign. With the markets matured, it sees past the idea that a exchange is correlated with the concept of Bitcoin. The idea of cryptocurrency as being safe isn't necessarily judged by the methods by which people can purchase and buy and sell and trade. So it's like a really important step in the positive direction of legitimizing Bitcoin as a concept, I think, and cryptocurrency, of course. But should we be concerned about OKEx? It's hard to say. I think this is probably a good time to reiterate people should not leave their coins on exchanges. As part of an understanding of cryptocurrency, don't forget the OPSEC side of things, online personal security. Keep your passwords safe. Use different wallets. I mean, it's there. You can't have 50,000 different bank accounts, but you can have 50,000 different Bitcoin addresses or Ethereum addresses. So use them and spread your risk. And I know it's easier said than done when people are trading. They want to have the funds available on the exchange so orders can execute. I mean, what do you do? This is part of the growing pains of being in a brand new industry that's moving at breakneck speed. There isn't really a solution other than to store your coins offline, and then when you really need to trade, move some coins on. Now, I can't comment specifically on OKEx. I'm not too familiar with their setup and the sort of the security settings that they use. But what I will say is, be careful out there. Don't expect anything. Certainly, the fact that OKEx is able to recover from this, or if they can recover from this, then that's a positive. But this is crypto. It's the Wild West, and really speaking, there's a risk anytime you use an exchange, anytime you use a wallet that isn't yours, that you don't own the keys to. You lose that part of cryptocurrency, which is arguably one of its main benefits. That's the right to be your own bank and the ability to own your own assets.
Yeah, I wanted to definitely speak on that, Krista, because basically over the last, it's been about more than a year now. It's a year and a half. I've been working on Digifox, which is basically a crypto smart wallet. And this has been a whole focus point of myself, was that when I started the company, I was thinking do we want to just build a traditional platform where people trust us with custody of funds, we get the proper licensing and the best custodial solutions? Or do we build something where at the get-go, you really get to determine what you want? Like, do you determine if you want to manage your own keys, or maybe trust a partially centralized solution? Really to have that option in that case. And I had a long thought process about how I wanted to go about doing that, and I talked with the engineering team. Well, we basically came up with, I think, a happy medium, because there is some services, as you mentioned, you want to tap into exchanges or centralized providers, maybe to provide an ability to make trades or earn interest on your digital assets. But at the same time, some people really want to do things completely decentralized, and there should be a way where you can manage your own funds, but you don't have to deal with the complexities of private key management. And all of that as well, you should be able to tap into DeFi and all the new decentralized finance services that are coming to the market. So you can earn interest in a decentralized way. You can make swaps or trades in a decentralized way, if that's what you prefer. And luckily, we've been able to kind of do both of those within the wallet, which is really nice. But I think the biggest thing above all is that there are a lot of solutions out there in the market that don't have, not only that they don't use the best leading house custodial practices, but along with that have ones where basically the only people who can withdraw those funds is the address they came from. I think that's very, very important in that case, to make it where there's extra additional security measures. That doesn't apply in all platforms. Like an exchange, maybe you want to send it to another Ethereum address or Bitcoin address. But that's something that we have, for example, with Celsius. In that case, you can only withdraw funds from your Celsius account back to your core Digifox address in that case if you were to move it to anywhere else. So that's a big thing. Like we really are big believers on that case, trying to make it as smooth as possible and secure as possible as well. But yeah, there's not, I would say above all, I don't mean to be biased by any sense, but there's really only a few exchanges I trust in the world, and they're usually the Western exchanges, such as Kraken or Coinbase or Bitstamp. These are people who are licensed. If they were to try to run away with money, regulators, they're much more likely to put it this way. Regulators are much more likely to show up at their door when they try to steal funds versus just doing business as usual. The regulators, for the most part, have actually been very, very open to crypto. So I think that in this case, the best thing we can do is give our trust, if any at all, over to platforms who actually have shown that they've been around for a couple of years, and that they're not some company that's in a country where we're not certain that the regulators are showing the same level of support.
I was just gonna add that on the point of the regulators, that's really important. I think if you're going to have a relationship with an exchange, it's worth having a look at how they're set up, doing a little bit of due diligence as to where they're located. Have they applied for any licenses? Do they have any form of insurance? Who are the founders? And moving away from that whole sort of shady aspect of crypto. We know that Bitmex is famously registered in the Seychelles. We do know who one of the founders is, but it's there for a reason, right? It's not there to help and benefit the citizens of the Seychelles, although one can't argue Arthur Hayes' charitable qualities, but there's a reason why a bit license exists, and I know that US based exchanges have them. You mentioned Kraken, Coinbase, Gemini, of course. Look, the chances of the Winklevoss twins running away with the entire exchange are much lower than OKEx or even Binance or any of these other exchanges, which aren't regulated in the same way, which may or may not operate practices that are anti-consumer, anti-customer, even sometimes. And I'm not making any accusations. I'm just saying you should do your research. And I think that's natural. I think that's the way that the space is going to move as we have more legitimate companies who have economies of scale, who already operate, financial products. As more people get interested with Bitcoin, it's going to be the legitimate companies that win. I do believe that firmly in the end. But we're just not at that stage yet. So I think due diligence is really important, and just making sure you know who you're doing business with.
Yeah, and I definitely agree that you are slightly safer when there are the right licenses, and it's in a country where definitely the police can be at your doorstep. Yet at the same time, I will never put a large amount of trust in any exchange, keep it on cold storage. Because, for instance, Bitstamp that you mentioned, Nicholas, got hacked in the past before. So, I think cold storage is definitely the way to go, and software wallets maybe. But at least your own keys, your own crypto. That's the most important part. But to get a little bit back on the article, let me quote a little bit from the article on CoinDesk. Of course, OKEx is a Malta-based exchange. It's one of the biggest, it's the second largest cryptocurrency derivatives platform by 24-hour volume, according to Skew. And I think one of the juicy details is that hours before OKEx announcement, significant withdrawals of Ether, Tron, and Bitcoin were completed from known OKEx affiliate addresses, as picked up by on-chain transactions monitoring service Will Alert. What do you guys think about this? Is this an exit scam?
I would have to see the numbers in that case to really get an idea, Walter. But I think from my understanding, it could just literally be people pulling off their funds while the systems are still running. in order to kind of get off the platform in time before regulators step in. We've seen this happen before when there was like shutdowns of a lot of the Korean exchanges. Bithumb went through the same thing. A lot of users tried to withdraw or basically were revoking funds from the platform. Above all, though, I wouldn't write it off. Again, this is why I've told people, like, there's a lot of U.S. participants, and they're not supposed to be doing this, but they go and register, Bitmex accounts, they register OKEx accounts, they go try to register accounts on all these different platforms. And of course, the platforms themselves, employ certain things to prevent people from doing this, but there's ways where people can find a way around it. And I've told people constantly, don't settle for these lower end exchanges. A lot of the volume on these exchanges is fake. A lot of these exchanges themselves know that they're eventually going to have people registering in the US on their platforms. And the worst of all is that they're doing all this knowing that when you come onto that platform, you're most likely not aware that they're trading against you, that they could run away with your funds. And they're in a regulatory jurisdiction where you have no rights whatsoever as a person, to your funds. It's basically like a traditional bank. A lot of people don't know when you leave your money at the bank, it's not always yours, depending on the country you're in. And that's a very, very scary thought. Again, as you mentioned, Walter, it's where, like, first off, I would say most people probably don't do good trading in crypto. So as much as I talk about trading on my channel, it's sometimes best just to hodl. And if you're going to hodl or at least have a long-term position that you're not touching, there is no incentive to keep it on exchanges. Worse off unless you're putting it in somewhere like Celsius, in this case, like we plug into in Digifox, where you can instantly earn interest on your Ethereum, on your stable coins, things of that sort. If you're not putting it to work where you're going to earn interest, have no doubt in your mind for a moment that the exchanges are just letting it sit there. They're lending it out to people. They're making interest on it in the background. They're making a killing off the fees they're charging you, all these things. If you're just going to hold it, you don't expect a yield, just hold it in your own keys. Like you've said, Walter, I think it's very true. Exchanges are nice and they're convenient for accessing services, but their service is not supposed to be custody. It's supposed to be buying and selling and earning interest and doing the things that can help increase that experience. If they're not offering that, or you don't need to access those services, get off of there ASAP. It's the best thing you can do, and make sure you know how to properly manage your funds in cold storage for sure before you do that.
So talking about exchanges closing down, there's a really good article on Cointelegraph saying 75 crypto exchanges have closed down so far in 2020. Is this now something we could have expected, talking about how bad exchanges are, Christo?
A couple of things. Firstly, yes, a bad exchange is only going to bring in a certain amount of punters before it doesn't become economical to continue. And of course, the second thing is, we've had a huge amount of volume on Uniswap recently. And let's be honest, 99% of stuff on Uniswap is mostly trash. Whereas, stuff like that would have previously been traded on these shitcoin exchanges of very low quality. They're now going to be traded on Uniswap. So, the market shifted. I think Uniswap did more volume than Coinbase in the midst of this sort of DeFi hype. And it brought a lot of people on and a lot of scams on as well. We all remember the various food-based meme coins.
I remember the sushi drama.
Yeah, sushi, yam token. There's like a ton of different like food tokens and stuff. But you're right, Chris. That's a good point. Like to see the correlation of DEX volume going up and also traditional centralized exchanges going down. The point I was going to bring up, just to build on that, I was originally thinking more along the lines of like, there was a big influx of exchanges in 2018 that came in during the bear market, and I don't think there's been enough substantial increase in liquidity to justify a lot of them remaining around. There's a lot of, all new derivatives platforms, and now with the Bitmex news too, it's like is a terrible environment to try to create an exchange now, because you're dealing with obviously custody standards, regulatory standards. And if you're offering derivatives products to U.S. users like Bitmex ended up doing to a lot of people, whether it be knowingly or unknowingly, I won't speak for that. But we'll have to see how things go with that. But all in all, it's basically this terrible scenario where it's worse off now to be a centralized exchange. DEXs are taking all of the speculatory volume of crypto It's like, I mean, what do you do now? I mean, like it was. I think the ultimate kicker, I would say, to kind of summarize my point and build on your point, Christo, with the DEX volume, was that there was so much traffic going to Uniswap that Binance and Coinbase, with all due respect to them, I think they're
They
good
started
companies.
adding these shit coins.
Yeah, they started listing the tokens. And CZ himself said it on Twitter. I mean, like, people kind of criticize him for it. I appreciate the honesty, and it was just that it's like, look, they're an exchange, and if they don't list it, someone else will get that volume. And it's like, it shows you, at the end of the day, there's no standards anymore. It's a matter of what brings the revenue in the business.
I was disappointed by that decision by Binance.
Yeah, no, I would say in that case, Walter, I do agree. I think that if you're going to have listing standards, you should stick to them. But I think it shows in this case, just above all, like I appreciate more than anything that they were honest, and it shows something that centralized exchanges are in a desperate position. I mean, just if you guys think just like a year ago, right? If I would have told you that Uniswap was going to be processing more volume than Coinbase, anyone would laugh at you, and rightfully so. It would be so difficult to know this would have happened a year ago. But now, whereas just a couple months ago, DeFi was this cute little toy that everyone could kind of laugh at and say, oh, we're maybe doing some research here. Now it's a serious challenger to traditional centralized exchange models. Absolutely. And the same could be said for centralized custody of funds and stuff, for earning interest. We could see Compound and other players continue to grow. But we'll have to see. I think AMMs, though, automated market makers like Uniswap, have been the best application so far in the sense of traffic and volume. It's consuming 20% of the Ethereum network right now. So I think it makes it very clear that it's well positioned for sure.
Yeah, and to wrap it up a little bit with this last article, let me quote a small part from Cointelegraph. In total, 31 were shut down voluntarily, while 34 were labeled as missing in action for disappearing with no explanation. Dutch exchange NLX, I personally have never heard of it. I'm Dutch, but I think maybe that proves what a shitty small exchange it was. Dutch exchange, NL exchange, and Chilean Chillbit were the only two flagged as being shut down by their respective governments in 2020. So in other words, most exchanges just run away with your money, or they say they are getting hacked. At least the 75 closing down only this year.
That's incredible, man. Yeah, I think you bring up a good point there, Walter. Like it depends on this question of like the not your keys, not your crypto. Of course, it's pretty much true. No, it doesn't really discriminate where you are, but I will say that the risk gets worse and worse of ignoring that statement if you're living in an area where the only exchanges you have not been reputable platforms. So, again, making sure that you have someone who's been in the industry, if you're ever going to trust an exchange to buy crypto or hold your funds for a substantial amount of time, definitely make sure you're working with a provider that's been around for a while, that takes security seriously, and do everything you can. I mean, the one thing I always bring up to people is that, even if it's a software wallet on your phone, that is better than leaving it in an exchange, right? If you can't afford a Ledger or Trezor, if you only have like $100 in Bitcoin, just download a software wallet on your mobile phone. Write down the seed phrase. It's better than leaving it in a centralized platform. Yeah, but make sure as well, equally so, that you do proper private key management if you're going to do that. Or you can use something if you're holding Ether or ERC20 tokens like Digifox, where you don't have to manage a seed phrase. It's just your phone and your email, the same kind of two-factor authentication that you would use on other platforms.
Great stuff. I mean, it's great to have Nick on here. I think it's really interesting that we've had some of these wider discussions about Bitcoin and cryptocurrency. I'd like to get your thoughts, Nick and Wouter, on where you see the space in about 5 years' time, and what the ideal situation would be for cryptocurrency. Is it always going to be this sideline thing that's always going to exist as a hedge? Do you believe in the narrative of, something that can replace cash? Or do you think, Bitcoin and cryptocurrency will always sort of be this sideline thing? And until, the Fed totally destroys its own currencies, we're not going to be talking about crypto as anything serious for a long, long time. What are your thoughts?
Yeah, man. It's a very difficult thing. I mean, just think back 5 years in crypto and think to where we are now. a lot has changed, but also some things haven't. The major way that people are still getting crypto is they're buying it through an exchange. That's the point that I always like to bring up to people. People aren't earning it. They're not receiving it as income. We don't have banks en masse hedging themselves with crypto. We're not at that point yet. I think we could get there in the next 5 years where we could see a lot of shifts. So I'll list out some of them. So to your point there, Christo, on a broad perspective, yes, I don't think crypto is going to swallow the world. I don't think that that's going to happen in the next decade. I don't think it could even happen in the next 2 decades. To look at the internet as an example, the internet has still to this day, it's been around for decades upon decades. If you're talking about its very, very early days, or if you're talking about more the formulation of the early stages of the internet in the 90s with the dot-com bubble, even 30 years after the start of the dot-com bubble, the internet is still only around 55 to 60% global adoption. There's still a good chunk of the world that doesn't have access to cellular data, to the internet. So considering that and keeping that in mind, crypto is not, especially as a financial asset class and as a financial technology, it's in its infancy. We're still at less than 1% global adoption. I think in this next cycle, we can reach maybe 2 to 3%, which would be a huge leap forward for cryptocurrencies. And that's going to be through investment accounts, people owning Bitcoin, people as well through streamlined applications, tapping into DeFi, not knowing that they're using DeFi. It has to be so synonymous that they're just getting better interest rates than their bank. They need to be able to buy the assets that they want without question. It just happens. Those are going to be the kind of entry ways that people get into crypto. And again, it's going to be seamless. Unless they know they're buying Bitcoin or Ethereum, they're not going to know that, have to think about USDC being a crypto and that they're interacting with the blockchain. That's the next step, I think, that gets us to a $2 trillion market cap for Bitcoin in the next 2 years, that gets, DeFi towards a much larger scale and really reaches out to the next 1 to 2% of people in crypto. And then over the next 5 years, I think we could reach up to 5% of the world interacting with cryptocurrencies in some way, shape, or form.
Yeah, I think there are 2 parts really essential for where Bitcoin will be in the next 5 years. First of all, I think it's really important that the technology gets to a level where it can be used as a world currency if we want to, use Bitcoin as a world currency. And unfortunately, right now, it's not there yet. The Lightning Network is in full development. They're doing great. I think they will finish to a version 1 within the next 5 years. But that's always very, very difficult to say. And I think the second part, with your question, is it going to be a world currency or not? I think, unfortunately, right now, it's more important what the dollar is doing than what Bitcoin is doing. As long as the dollar or the euro keeps being a better alternative as Bitcoin, and let's be honest, if I'm going to buy a coffee here down the street, I'm going to pay with euros. I'm not going to pay with Bitcoin. So I think as long as they keep a better position than Bitcoin, then we won't see Bitcoin as a world currency within the next 5 years. I think that is too soon. But, we also mentioned, I think it was you, Christo, with the 20% of dollars being printed in all circulation over the last 5 years. If they keep the printing machine up like this, maybe it will go down within the next 5 years. I think right now, unfortunately, we are dependent on what the dollar and the euro will be doing in the next 5 years.
Yeah, it's really interesting, Wouter, that you say that. When I spoke to Andreas Antonopoulos, the one thing that sort of struck me about his conversation was the fact that people that need Bitcoin and people that need cryptocurrency will use it, but we don't need it here. So, he spoke about 2 examples. Venezuela was one of them, and Argentina was the other one. And in both of these countries, due to economic mismanagement by the government and the regulatory authorities, it's become very difficult for normal people to actually use the currency that exists, much like the US dollar exists here, the fiat currency, in a day-to-day lifestyle. And so they're forced almost to look at alternatives. And that's where, alternatives like Dash and other cryptocurrencies and people using Dash to pay for their subway and things like that, or even using IOTA to buy bread. It's pretty crazy, but we're starting to see things like that in these countries. And so he echoes that argument that we will never actually see full adoption of crypto until people really need it. But what you're saying and what Nicholas is saying is that we'd like to get 1 to 2% of people, but what's going to attract them if it's not going to be usage and currency? Is it going to be yields? Is it going to be just storage of money, putting your money somewhere where no one else can touch it? Or is it just going to be the fact that you like a hedge, and if shit hits the fan and the world goes into pandemonium, your money's not going to burn, or is it?
I think store of value is the best part of Bitcoin for the developed countries right now.
Yeah, I think it's a stepping. I think a lot of people have talked about it being a stepping process where you start as a store of value. In that case, where people can actually at least hedge, for example, people sometimes misalign store values being something that's not volatile. It doesn't mean it can't be volatile, but it means that the majority of its history, when you've purchased it, you're able to sell it at either a higher price or the same price you bought it at, getting the same value back. So that's the whole idea of a store of value and hedging against factors like inflation. But all in all, yeah, I agree with you. I think in that case, Walter, I think that'll be the first step, and then after that, we could work towards currency. It may possibly, or if not, at least serving as a protocol for different types of financial transactions to happen without permission. I think that's a really interesting proposal. I've seen a few projects looking at kind of taking Bitcoin, and also we've seen it with DeFi on Ethereum, and starting to do more unique transactions that instead of just Alice sends 1 Bitcoin to Bob. I think that's an interesting use case, payments, but there's going to be so many other things you can do with the security and the power of Bitcoin, of Ethereum, and all these other networks that I think 5 years out from now, we have no idea what it's going to look like. So it'll be really, really interesting. But it's very far out kind of idea. There's a few projects working on that right now.
All right, shall we move on to the technical analysis?
Absolutely. Good
Great.
stuff.
All right, so Bitcoin is right now trading at 11,438 on my chart at TradingView. For the last 7 days, there didn't happen a lot with the 0.22% in the plus in change. Also, the last 24 hours, we didn't reach a threshold of 1%. So it are more calming waters. But what I'm really happy about is the triangle that was formed quite a few days ago, where we broke out on October the 8th. So we had a triangle forming starting around September the 5th, and it was more or less a 50-50 with this pattern, symmetrical triangle, whether we would break out upward or downward. And luckily we broke out upward, and there we saw a little price spike from around 10,700 to levels at the highest of around 11.7k, and now today trading at 11.4k. So I'm quite happy about this move. What is your take on the current market, Nicholas?
Yeah, so basically I have generally speaking, a general thesis where I'm not looking too much at the hourly or the daily. I know about that wedge you're referring to, Walter, and I was very excited about that as well. Basically, when I look at the chart, I look at what a naked trader would do, and that's basically someone who looks for support and resistance. I look for where Bitcoin has historically found support, where it's found resistance, and what price is generally telling us at the moment. So what I'm really excited about right now is as we've broken out of this kind of short-term wedge, we have a chance to test right back up towards the August highs. And if we can get above basically 12K and get a close above 12K for the first time, really, a lot of people don't realize this. We actually haven't had a official, substantial close a little bit above 12,000 since as far back, at least on the weekly chart, since as far back as January of 2018. when we started to actually pull back in the market. Every time we've gotten up in this range, we've gone maybe to 13,000, but it doesn't last within any weekly candle. So if we can get a substantial week or two above 12,000, I think in this case it's going to be a confirmation that we can come back, make 12,000 support, and then after that we can really just take off and allow Bitcoin to rally back up towards 20K going into Q1 of 2021. So that's my general thesis. Trying to keep things as conservative as possible. I know people want things to happen overnight. They want us to go back to 20K like within 5 days. It just doesn't tend to happen that way in most cases in crypto markets. But the good news is that once we get above 12K, if you look at the chart for Bitcoin, historically, there really isn't much points of resistance to look at, historically speaking. So I think that momentum can happen and is as short as a couple of months here going into Q1 of 2021. So that's my general thesis. We'll get back up to those highs around 19,000 to 20,000 around then.
Yeah, I mean, just to add, I completely agree with you, Nick. I've said this before on the podcast. For me, the 12,000, 12,500, that is the most important zone. We're just not able to sustain above that. But when we can start closing some weeklies, even a monthly, that is when I start to get really excited. And until then, we're ranging, we're making higher lows, which is a good sign. But I'm not getting too excited. And like Nick, I almost entirely agree with you where I'm being conservative and I've got a plan for what Bitcoin's doing in this current range that it's in, and I've got a plan for what happens when Bitcoin breaks through that 12.5k zone and starts closing those weeklies with a lot more strength than it has been doing previously. As we said, we shifted up to about 13.3, 13.4, came back down. I think the last time we breached 12k, we got close to 14. Or even 14,000, and we pushed straight back down. So agree with you there completely. That is a really important zone for me, and I think a lot of people are also looking at that as the kind of real strength metric for Bitcoin.
Walter, what's your take on it?
Well, I was going to say, Nicholas, we on this podcast are also a very big fan of support levels and resistance levels. So I wanted to talk about that a little bit as well. Of course, we have the 50-day moving average and the 100-day moving average coming close together at 10.8k. So that should be a good support line if we go down. And then, of course, if we go down even further, the last low was at 9.8k. So if we break below the 9.8k, I think that would be quite a bearish sign. But right now, I don't have a reason to be pessimistic. And then on the upside, of course, breaking 12k would be really significant. And then setting a new high above the 12.5, that would really push this bull run forward, maybe in quite a high tempo.
Yeah, man, absolutely. I think to kind of summarize the topic at hand and stuff, because I know it's probably the most important one for everyone listening in who's invested in Bitcoin. The reason why I'm glad you guys shared that same similar mindset about support and resistance being so important is you can have all the indicators in the world telling you, oh, this asset is bullish, this asset is bearish, like these are levels that you need to watch. But in reality, nothing will tell you more than price. What price tells you when you look at support and resistance, you can see when it tends to be that the dynamic of buyers and sellers outweigh one or the other. So if we can see historically speaking that at around 12,000, we do not hold above that range for a long period of time, that is when people who have bought crypto tend to sell positions and they start to outweigh any new buyers in the market. Now, it doesn't mean we can't break above 12K. It just means that historically speaking, it's been a difficult level to get through. Now, when we do see that breakout above 12K, the next thing we want to see is, okay, we've seen it in the past. The price has gone above 12K since back in January of 2018. The question is, can we hold it? And if you can go up maybe towards 13, 14K, you come back down as you tend to, and you're actually able to hold at that level where buyers are outweighing the sellers at 12,000, that is all the sign you need. You see it there in price. And that's going to be the follow through that leads into the next cycle going into 2021. where you can test 14, 15, 16, 17, 18, 19, 20K and beyond, going to 30, 40, 50, or whatever kind of price target people have for the next cycle. But yeah, that's my whole point. I always bring that on the channel. And some people are like, Nick, don't you want to use more indicators and this and that? It's like, no, you really don't have to. You end up just creating noise for yourself. Naked trading is one of the best things you can do. Looking at support lines, resistance lines, it's the best thing you can do for sure. And if anything, I would say I agree with you, Walter. Like moving averages are a good thing to use as well. If you're looking for very simple indicators to not like clutter your chart with, but just to get some insights where price might be finding support.
So guys, to wrap it up, are you bullish or bearish on the current scenario for Bitcoin?
I'm most certainly bullish. I think
yes.
Maybe Christo, with the way we were analyzing the chart together, we hold a pretty similar position. I think, again, at this point, again, I'm not someone who would say put everything you have in crypto. I wouldn't say that for any asset class. But I do believe that the kind of healthy, again, non-financial advice, but like I think for a lot of people, as we saw through the recent Fidelity report, a hypothetical portfolio of 1% to 5% exposure for Bitcoin has paid off quite well over the last decade. And again, I think that's kind of the healthy position that Bitcoin has in people's kind of portfolios. If you're looking for just a hedge, if you're looking to speculate more, 10 to 20%, again, right now, as we talked about earlier, it's a matter of putting yourself in a position in assets that are performing well against the dollar. And Bitcoin and cryptos as a whole have been the best performing asset class. Still with a great year in equity, still with a great year in gold and silver. It is still the best performing asset class in general since we had the flash crash in March. So I'm very excited to see if it'll continue to maintain that status as one of the best performing asset classes. Krista, what about you?
I echo your sentiments. I think it's still the best performing asset class that we've had for the last 10 years. I can't think of anything else. But more importantly, you asked if I'm bullish on crypto. I am. I'm bullish on the concept of crypto. I'm bullish on the ideals that cryptocurrency and blockchain and decentralization brings to the table. We're having discussions about financial privacy that we wouldn't have been able to even talk about, had it not been for what blockchain and what crypto offers. The idea that a bank can take your money, gamble with it, use it 3 or 4 times, and then return a measly interest rate that actually means they're not even paying you what inflation is ridiculous. And blockchain offers a solution to that. The fact is that we have these options. What we have to do now is just work out how the masses can start to use them, how people can benefit from crypto without necessarily changing the way that they use money too much, because fundamentally I do believe people like change, but you've got to make it really easy for them. And I know Nick with DigiFox, you're probably facing similar situations where you're trying to make the user experience as easy as possible. And I just don't think crypto and blockchain is there yet, but I do see aspects of it occurring throughout the space. And I think, give it a few years, we'll be at that position. But at the moment, we're having that discussion. We've got the options there. So it's, fundamentally a very exciting proposition. Anybody who is able to understand the way money works, the way inflation works, the way currency works, has no reason to be bearish on the idea of crypto. And it's a very exciting thing, and I look forward to it and see what happens in the future.
Yeah, for me, as long as we're setting higher highs and higher lows, and since March this year I'm still very bullish on Bitcoin. So I'm happy with where the market is right now. Shall we wrap it up there, guys?
Yeah, and I think it was a wonderful conversation, man. And I think these were some great topics that we talked about today. And above all, as always, it's nice to talk with two of my favorite gentlemen across the world. And I appreciate that, especially during these times, even though there's a lot of negative things going on in the world and stuff, we've got a really good opportunity here, I think, in crypto to hopefully uplift a lot of people, everyday common people who are starting to get smart and with their money and starting to look elsewhere. So I'm very, very excited to see what kind of innovation and exciting things happen going into 2021 for sure.
Absolutely. Guys, use your time wisely. I mean, 2020 is in somewhat a blessing in disguise. Everyone's working from home. Use that extra time to skill up and learn about money and listen to DataDash and Crypto News Weekly. bit of self promo.
Nicholas, thank you so much for making this crossover episode with us. And all the best of luck with Digifox, of course. And we most definitely will stay in touch and see each other maybe in the next crossover episode at item 200.
Awesome. Thank you very much, Walter and Christo. It's great to chat with you guys.
Take care, Nick. Pleasure as always. See you soon.
Cheers, guys.
Thanks, Winter.
Cheers. Thanks, Christo.
Bye.